Hello, it is the 25th of July 2012. It is a Wednesday. This is a gold and silver update. And within these charts, if you're looking to use technical analysis, at least the studies that I use within the Fibonacci retracements, it's a stalemate. It's a waste of time until a lot more things come into play. The silver markets and gold markets are not breaking down, and they're not breaking out. So yeah, they're going sideways, which is pretty much a waste of time. Within this 18 average of highs, lows, and closes, well, I've talked about what it needs to reverse a downtrend. Okay, so you get above it, that's great. Now you find support. Yeah, that was lower than I liked, and well, it didn't break above here. Plain and simple. Whenever it's breaking above the 18 average of highs, it's stalling. Whenever it breaks below the 18 average of lows, it's stalling. Today, it has just broken above the 18 period average. Now, with that being said, it's really got to have a nice clear break above this 1623. If it does manage to make it up to this level, this would be the fourth test of this level. We're also in a symmetrical triangle that's coming to an end right now as well. And let me just quickly draw it in. I think you can see it a little bit nicer on the weekly chart. That's the support level, and there we have it. That's a symmetrical triangle. And I want to show this now on the weekly chart. So let's go to the weekly on gold. Here we have it. We have Fibonacci from this low and this high. And quite frankly, it's not breaking down again. It's not getting above this level. It's still in that declining 18 average, but still sideways in the consolidation band of 1525 and 1900. So therefore, let's zoom in on this and take a look at the symmetrical triangle this way. And we'll zoom in. We'll draw a support line. There we have it. We can see it was hit on 1, 2, 3, 4, 5 different tests. And then there, of course, is the resistance level. Within these trends, oftentimes when you get close to the conclusionary phase, like we see here, that it can have its explosive move close to this point. One thing you really got to look out for is that oftentimes, but not all the times, the first move is the failed move, meaning if it goes down first, breaks below the support, then that can oftentimes be the failed move that goes higher, and then vice versa, of course, if it breaks above and gets past this resistance field. And it's been in this correctionary sideways nonsense for quite some time, so how much longer it can do it for, you know, I don't know, but it's still not even August yet. Let's take a look at silver now. And we'll start off within the daily chart. And this is a daily chart. We got a high of 37.50, but I mean the highest thing you can see on here is 34.46. And we have a low of 26 and a dozen, 26.12. Now the reason why I still have the high of 37.50 is because the original Fibonacci retracement from the 2 points has not been resolved yet. So what we can do is I can just backtrack. If I do like a 2-day chart, then I'd be able to get the top, and I could do that, but I'm not going to because I want the top of the market to be close to the left-hand side as I can. And to do this, today it would work out to be that of a 25-hour chart. This way I get the top and I get the low. This thing will be finished when it has a clear break below either 26.12 or a clear break above 37.50. When that's the case, then this retracement from point A to point B will be over. But until that's in play, which it's right now, that's the trend. So anyway, with that being said, again, this is the downtrend line. Let me just draw it as best that I can. And there we have it. You can make a little case for the symmetrical triangle, but they've all failed too. Okay, now with that being said, we're in this long sideways consolidation. It's still staying within the bands. This is pretty much the exact same as the daily chart. In fact, there's like 23 hours in a day, so each one of these candles is a little over 1 day now. And in the short-term analysis, what I'm looking at is the direction from point A to point B. And I've been looking at this Well, ever since pretty much it started. So we'll now move on to the 8-hour chart, and if it takes longer, then this will turn into the 9-hour chart later on. In fact, it will turn to the 9-hour chart probably tomorrow, because this is the top right in here, and this is the bottom. There has been 1, 2, 3, 4, and even today with a pierce below, 5 tests of this significant Fibonacci level that has been resistance. That's bad. That's weak if you look at this on a bullish case. However, it's not breaking down either. So it's not bullish nor is it bearish. It is a neutral mess, to say the least. Again, when it breaks through above this, then I'd be looking for this fast move up to here. And even then, it's still in this whole choppy sideways action. It needs to do a lot more than this, because it needs to come back and test that significant 30 level, which we can take a look again on the 25-hour chart. This is that significant 30 mark, and that's on the bullish case. Of course, on the bearish situation is you break through 26, and I've talked about that for quite some time. I'm not going to show the dollar index chart today, but on the short-term level, it's breaking through. Again, just like these charts showing a lot of indecision over multiple periods, the dollar index is doing the exact same thing, so I'm not going to lead too much into it. But if you start to see the dollar index approaching the 85 handle, then there's a decent chance that that could break down below these significant support levels and test that high 20, high teens, low 20 area. And then, of course, in gold, that would mean a test of this previous resistance band at around 1,400 and change. Thank you for tuning in, and have yourself a great day. Bye-bye.